Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to talk to you about tax elimination in retirement and ideally before retirement. So remember this, it's never too early, it's never too late to get a head start to be sure you're being retirement tax smart. And when you look at these inflation numbers that came in over this last couple weeks, where inflation is now running as an average on a bunch of different things as an average. Some things are up 20, 30, 40%, but as an average up over 9%. More a year later than a year ago. I can't stress this enough. Many people have been lulled to sleep about taxes thinking, well, if inflation's remained that low, and now we have this harsh reality of how much higher inflation can rear its ugly head, I want you to really think about all this drunken sailor spending by an administration that has no idea what they're doing other than how to raise taxes or concoct ways to raise taxes to get you and I to pay more for those of us that have worked the hardest to save. Well, that means tax rates, folks, are not going to stay low. Just like we've seen inflation spiral, many of you are concerned about taxes spiraling. And when you look at the Center for Retirement Research at Boston College, who said on average, 25 to 33%, so a quarter to a third of everything you and I have worked so hard to save is going to be devoured by taxes, it's time to get really serious about taxes. And why? I think about Bob and Cindy out of the great state of Colorado we just met with. They said, look, with all the knowing coming higher taxes, right? In fact, they quoted saying, with so much future tax, how can we protect our assets from taxes? Folks, the time to do that is when you have control, right, of the tax code in the rules as they are today. And when you take control of the fact of a timing aspect, two timing aspects, I'll teach you this Tuesday at retirementprotected.com. That's retirementprotected.com. Where you've worked hard for your money, folks. Let's get to work. Learn how to protect. They said we want asset protection and we want tax protection. And one of the greatest things you can do to protect yourself from inflation, as I've said, and I'll say it again, is getting rid of unnecessary taxation. And taxes are just another form of inflation, folks. So if we now have a double-edged sword, we've got higher costs of living and higher taxes coming, a lot of people are very fearful what they're going to be able to do. Maybe they postpone retirement. Maybe they live a little less. That's not what we all signed up for, right? We're all working hard to save hard to retire well. Well, let me teach you this Tuesday at retirementprotected.com exactly what Bob and Cindy learned how to do. They used one deduction that creates a deduction in the code that is the highest it's going to be. After this year, it won't be as high. So this is the last year under the Tax Cut and Jobs Act to be able to deduct up to a 100% with this one strategy I'll teach you this Tuesday that you can use against your highest reported taxable income. So if you're going to convert IRA to Roth so that the income that you pull from the Roth now can be tax-free instead of the government forcing you to pay taxes when you pull money out of your IRA or forces you to take a certain amount of money like I talked about last week, right, with Bill and Sue, who had to take out what they project in 10 years, $200,000 a year because the government mandates that through a required minimum distribution. Folks, this is where people are getting taxed to the max. And some of you are coming to us saying, look, I'm seeing what's happening to my older parents, and they complain about tax after tax after tax because they have to keep taking these required distributions. Let me teach you how to eliminate taxation in your retirement, be it before or while you're in it. It's never too early, it's never too late to be retirement tax smart in getting that head start. And I want to teach you what you can do. That deduction they used to offset getting IRA money to Roth IRA. And normally that would be a taxable consequence, but because they bank this deduction that's as high as it's going to be, while their account values, before they rebound as the market will eventually come back and go higher, because when we met them, their account values are down about 30%. They also didn't have asset protection. I'll also teach you this Tuesday where you can have downside protection with unlimited upside opportunity, but also learn to do that tax-free. Folks, you work hard for your money. Learn what you can do to eliminate unnecessary retirement taxes. Stay ahead of inflation by removing unnecessary taxation, and don't let what you've worked so hard to build be devoured at 25 to 33% of what you've worked so hard to have, folks. It's your money. The key is having a better plan. And I'll leave you with this. There are two tax codes that some people allude to in our situation. There's the tax code for the informed and the tax code for the uninformed. Become informed. Learn how to use taxes to your advantage instead of taxes taking advantage of you. retirementprotected.com, retirementprotected.com.